Hello guys, welcome to the Train Parrot. A couple of weeks ago, I published a video where I compare Bitcoin by doing a ratio spread chart against DXY, VIX, Nasdaq, and the Federal Reserve balance sheet. Tons of juicy outcomes we managed to take out of that analysis. And since then, many people came back to me and told me you must be making a video about Bitcoin versus gold. And particularly today that we are seeing gold over $3,000, putting new all-time highs, such a crucial and time-sensitive information that we are gonna get out of just placing Bitcoin over gold on a logarithmic chart, weekly timeframes, monthly timeframes. I promise you that the information that comes out of this chart at the very least is gonna blow you away. Pause the video, go get a coffee, get a beer, relax. This is not information that you're gonna find in any other channel. Guys, if you like this type of content, make sure that you're subscribed to the channel, hit the notification bell to get notified every time I put out one of these videos. And remember, our all-time goal is been always to get over 1,000 likes, which we have done a couple of times. It would be awesome if you can help this video to get over 1,000 likes. Let's get into the content. To get started, we are going to go with the monthly chart. We are going to set it in the logarithmic scale, and we're going to observe the RSI on the lower end. We're also going to look at the long-term support band that we have in here. We're going to see where we are. We're going to look at the timing of each individual peak. And of course, to be able to do this analysis, you have to write down in the symbol instead of just BTC. Make sure that you pick, for example, in here, I'm using the index of TradingView BTC because it contains the full history divided by dollar. In this case, it's Wanda version, but you can use any other alternative. So let's remove first the RSI. Let's just focus on what this beast has been doing. And all I did in here is to use this curve, which you can select from the brushes and shapes. And I placed the two dots, one around here at 1478 and one from the beginning of 2010, just after this shallow area in there, which is just too early to keep it as part of the chart. Then I play with the middle point to make sure that I get enough touches in the first cycle, second cycle, third and fourth. It's not the first, but you get the point. Well, this arc in here is very useful because it's gonna give us the times where we are bottoming. It's incorporating the FTX collapse. In my taste, I will have stretched it to touch both the closing prices of COVID and the 20K final support there, because from technical indicators, 20K was the bottom of the bear market in 2022, but the FTX collapse stretched that a little bit further into 15K. As a consequence of that, if we made this line to touch that, then we are not able to touch the closing prices of 2017 and 2020. It is a compromise, let's call it. If I make a copy of this line and I move it just straight up, there are some people that make it match, but in this case, we're not gonna do that. Today, we're just gonna focus, one, on downside, two, on breakdowns. So we're just gonna have a bearish look at what the chart is showing us. We'll still talk a bit about how can we get us out of here and what upside we have. I promise you, you're gonna love the insights. All right, for the tops of the market, what I'm gonna use to call out those peaks each cycle, I'm gonna use simply a naked RSI. In this case, I'm using the VIP version that comes with some additional things, but for this analysis, we really don't need any of that. Okay, let's call this cycle 1 in the chart. It's the first one that we can see. And we can place in here a trend line connecting the two initial pivots. And then we can see that on the first rejection of the second top in 2013, RSI goes down from 99 into 70. At that point, there is a very, very small, shallow breakdown. Let me show it in a magnifier, and you can see that it went slightly beyond where it should have gone, and then we have some sort of retest before further downside. So I'm gonna call that top the month right after that breakdown, or we could even place it 1 month before. It really doesn't matter. Let's just leave it there in the conservative point where we can see that we are below the line. That is top of the market, 1st of January 2014. After that, we can see that it's the beginning of that bear market that ends up placing a double bottom in this area in here. Remember, we're not going to look at the prices because this is the spread chart. It's a ratio between Bitcoin and gold. Therefore, 0.15 doesn't really tell us a lot. Around this area is where we start forming a foundation for a final cycle bottom, and we start initiating one of the most beautiful and perfect rallies of Bitcoin across all cycles, which is the 2016, 15, and 17 rally. You can see how perfectly it bounces off the line. And eventually, around 1st of January 2018, we get again a breakdown. But this time, you can see that is deeper than the breakdown that we had in 2013. So that is something just interesting. And whereas in 2013, we have immediately a retest against the trend line, in 2018, instead, there is just a humble move up and then deeper into bear market, right? One more to go and we get to the outcome of this particular cycle. Notice as well that each cycle puts bearish divergences at the top. Of course, if you were in December 2017, you wouldn't see the divergence because it requires a pivot and it needs a few candles after to be able to spot the pivot and detect in an automated way the bearish divergence. But experts in RSI and people that go to my channel and watch all the trading tutorials, particularly the 3 episodes that go from 0 to hero and RSI, you know how to do those tricks. Alright, some anomalies we're gonna find now in the previous cycle. There was the COVID crash, and you can tell that only in the first cycle we can use the initial low to start the trend line. In the second cycle, we cannot connect the line anymore with the actual bottom of the momentum, which is on 1st of January 2015. We actually have to use August 2015, which is already a higher low, to start and kick off the rally. Something very similar but magnified happens in COVID, where the actual bottom that we should be using will be this, but then there is no uptrend in the rally. We have to wait for March to put this move down that goes all the way to the base by the dollar of the bottom market. That is something that doesn't happen if we look just at Bitcoin. Let's look at Bitcoin in that area. The bottom of the bear market is 3.186 and COVID goes to 3967. But thanks to using the ratio of gold, it goes at the precise same value of 262 by the dollar. You can see it very close in here. And that is one of the beauties of finding the right asset to do your ratio. That's why I also use the other 4 VIX, DXY, NASDAQ, Federal Reserve balance sheet. I strongly encourage you to find this video 11 days ago if this is something that you like. I also have the deeper market correction chances also 11 days ago. Both of them the best 20 minutes that you can spend looking for stronger, longer term alpha for investors. Alright, so the previous cycle had a rally that we can say is way shorter than the exemplar 2017, and it starts having some ugly anomalies. You can see how things degenerate cycle by cycle. For example, cycle 1, you get a higher high on the last peak, blow off top of perfection. The same goes with 2017, which is, in my opinion, even better than 2013. Not performance percentage-wise, neither, but just the beauty of the technicals. The bouncing is just perfect. It's like in this area, there was no technician looking at this. If I got a rally like this, it will be so easy to continue going up, assuming I have the knowledge I have now, of course. This ugly beast in 2021, look at this. You have very shallow moves in there. Then you have a huge peak, the first one in 2021. And then you have a way lower. For the first time, we get a bearish divergence within the cycle. This one spans with the previous high from before the long run. This is from the previous cycle. And this one is in between the two tops. And that is because the second top wasn't meant to be there. That was just a dead cat bounce. It's kind of a magnified version of this thing that is in 2013, the small retest that grew into that, and then suddenly we got this. And if by now you don't agree, let me make one change to this line and you'll see it. Let's focus on the RSI. If you move this line and you are fair and honest, you wouldn't place it like this. Nope, this is trick, this is cheating. The way you should place it is initially like that. So if you come in time, you go like this, and then you leave it like that, and you, let's assume we are this day. We will say, whoa, we are in May. The cycle has finished. According to what we have done in the 2 previous cycles, that's the end of it. If we extend it like this, you will say, oh wow, we are having a revenge rally. We lost support and we are heading back to retest that for a final kiss goodbye. But guess what? The RSI went way beyond that resistance, which was flipped from a previous support, and it ended up closing in an area where we will have said, wow, we are reclaiming support. And that makes it extremely tricky for 2021. So let's leave the line back to where it was because I still need it in here. And let's assume that we're going to cheat and that we are going to call for the breakdown just like we did in the past 2 cycles in the breakdown in here. That's 1st of December 2021. We're just going to continue cheating for a few more minutes. And that calls out for the top of the market on the second peak, thanks to cheating, of course. By cheating, then the timing of this whole thing calls for around 1460 to 1430 days between peaks of each cycle. For example, this peak to the next breakdown is 1460. Then from this peak to that peak is 1430. And if we continue with that cheating, we're going to find that our next peak should be somewhere between 1st of November to 1st of December in 2025. That's not new. Everybody talks about that, right? But now let's remember that we were cheating and that the technical peak was the first peak of 2021. How does that affect the forecast of November, December? Let's make the change. Let's roll back. Let's put this like that. And let's move this line. And let's say that the breakdown, the previous cycle was in June. That sets this line instead of 1460 or 30 to just 1247. And now let's roll back this one, the 1430 that is calling out for November, December, and let's see where is it pointing. It's pointing to May 2025. Now, what is the RSI saying now in this cycle? Let's make sure that you can see all cycles. Cycle 1, cycle 2, cycle 3 with revenge rally. So where are we here? Well, we broke down in February and we are heading into 53 RSI. We took already the low of August in terms of monthly momentum against gold, which is something that in the previous cycle, that low didn't take this low until well in the bear market, or the beginning of the bear market, we could say, January 2022, right after the 69K, when we were going into already sub 40s and rallying into 48. So things are moving really quickly in this department by taking that low, by losing the trend line as well. And we already have in here a bearish divergence, which if you watch my trading tutorials, you should have already spot, even if automation is still not showing. Why is it not showing it? Oh, because we are just 2 candles away from that top and we need more to settle that pivot. But indeed, there is already a bearish divergence. If not against the first peak, against the second peak, doesn't matter. We have it. So I'm gonna change it to color red so you know it's a bearish divergence. And the chart basically of gold versus Bitcoin is already calling for a breakdown. Now, let's be cautious how we interpret that. We are looking at momentum in here. We're not looking at price. And momentum can cool down like it did in June 2021. It can break down and then it can have a rally that even enters the previous range of the momentum, causing a lot of confusion if you don't know what these things are capable of. And in 2025, let's assess the options that we have. Option number 1, this just drags all the way and it enters bear market. That option, I am against it at the moment. And that is purely because I am seeing a consistent and incremental sources of liquidity into the macroeconomy. We have the M2. In US, we've had the Federal Reserve increasing their balance sheet. And sure, things could get a little bit uglier at this point where we are challenging such fundamental moment in a monthly chart like this. General markets could really puke big, and that could cause a deeper correction. Sure, that is possible. But if the divergence continues with that underperformance of assets against an incremental global liquidity, that could cause once again another revenge rally into lost support. Luckily for us, contrarian to what we had in 2021, where we just have one pivot as a point of reference, when we started rallying, we had just that resistance as a second point of reference, but we didn't have a trend line on the top. Now in 2025, we can connect these 2 points and place them like that, creating a very interesting point of cross around October in here. And I really like that point because we already lost the support thanks to, in a big part, gold putting a new all-time high. It's over $3,000, whilst Bitcoin is now 82.6. That is really helping to produce this breakdown. But if we got that U-turn at some point, ideally in the shape of a V recovery, like in COVID, but this time in the topping year, not in the halving year, well, we could have a rally into that point. That is 64 RSI. And a 64 RSI puts the ratio beyond the highest closing price in history of the ratio, right? This is even higher than any closing price the previous cycle. The previous cycle, we managed to get to 34.66. And recently we broke out, but then we lost that. And that is an ugly pattern, which is currently calling for going for the next level of support, which is 23.48 in the ratio again, which by the way forms an M pattern. And just for the sake of keeping you informed on both sides, remember that we have those 2 options. Option 1, we enter a bear market, whether we want it or not. And option 2, we correct decently and then we have a rally revenge. So for option 1, if we complete that M pattern and we go to the base of the previous megaphone pattern of Bitcoin in 2024, that puts Bitcoin roughly around 60s, I will say low 60s. And that M pattern has a target that is pretty much in the band of bottoming areas of bear market. In terms of price, I will guess that this is roughly around 30K, 25K. Watch my other 2 videos, the deeper market correction chances and the ratios, because they are calling for different numbers. There isn't a match there. Actually, they call for around 40s and higher using VWAP indicators. But anyways, it's always good to have different perspectives. If the line holds, whether we need to touch it or we stop before touching it and we start challenging again this line in here, which we need to place there because that is the highest close. You can see that 64 RSI puts it at 38.13, and that is just enough to have this come back. Now, if you haven't watched the trading tutorials, and sorry for being so pedantic, this rally from 53 into 63 results in a move to that area. But here's the catch. The lower the price goes now, this guy in here, still being RSI 64, is going to start running away and heading into way more bullish areas. So a reset that actually holds is going to bring this line up like this. And then you can have something better. So be careful what you wish for, because if you wish a recovery from here, that just sets the price below the all-time high. And if we have a bit more punishment and we live to survive that, then the target becomes way higher. Of course, it also becomes less likely. The deeper we go, the more we break the structure and the more we risk the RSI to enter to areas that only belong to bear market. Think about this. This is already stretching it a lot. This low, yeah, it was low, but it was higher than the previous lows. This low already broke fully the structure. Lower high, lower low, breakdown. All right, let's take a breather in here because I know it's a cold shower, this particular analysis that we are doing. I still have hope for another leg up during 2025 thanks to the liquidity, but I'm also subscribed to seeing pain during 2025 given all the uncertainties that we still have. Let's just make a very quick analysis on the weekly, because there are some things to take away again in here when using the logarithmic scale. And it is this, because I've seen some people doing similar things on Twitter. And we can see that this whole bull cycle, we have been holding this trend line. And there are people in here calling for that breakdown. That is consistent with what we are seeing on the monthly, which is even more important of a time frame compared to the weekly, of course. And after seeing that, I want to see in previous cycle if we survive something like this. And I noticed something very interesting, which is once you identify a point that you can call the beginning of the serious rally, okay? I don't use the bottom of the market. I'm gonna use that concept, which I'm gonna expand as I explain it. On COVID, we take this low and we connect it with the next as a pivot, and it gives us kind of a similar ride, okay? Bottom to top to when it's actually starting to cool down before it enters bear market. Many people say bear market was fully confirmed once we exit this range from 48, devastating drawdown of 62%. This wave in here could have been or not the beginning of the bear market. If we cross 48 and we go into 150, no one will remember that this correction was bear market, just the same way as this one is not remembered as bear market either, thanks to the 69 that follow up that. So, do we survive crossing this line of support when doing Bitcoin versus gold? The answer of the previous cycle is no. What about 2017? If we start connecting those lines, do we survive it? Well, in 2017 is different, because if we connect this line like this, actually it points to the bottom of the bear market, and it doesn't really help us anticipating a breakdown. What about 2013? Okay, let's connect this in this way because there's no many other options. So let's connect this, the mid-cycle huge correction. It is huge. It's almost 70% correction in the ratio, but also in the naked price on Bitcoin. So after crossing the line, 2013 also agrees. You cross the line and you are in a bad situation. 2011, we could say the same, but it's already very deep in the correction by then, so it's not necessarily acting as a great signal. So conclusion of this one is that I struggle to find in the logarithmic chart of Bitcoin weekly a situation where we rally on a straight line of support and we break it down and then we have another all-time high. Alright guys, I hope you enjoy the analysis of Bitcoin versus gold. Let me know in the comments if you want me to do another analysis of Bitcoin versus a decently well-sized asset. We know that gold is huge relative to the market cap of Bitcoin. Guys, I still have 8 days left for you to join this trading competition on Bluffing. There's a link at the top of the description. We can claim up to 5,000 USDT. That's the prize pool. Bluffing is a non-KYC exchange. Once you open the link in the description, just click register now, trade, and I'll see you there. If you haven't already, hit the like and write down a comment down below, and I'll see you in the next one. Bye bye.